The fear is that inflation is upon us, that costs are going to go up for companies and for consumers. Let's bring in former Reagan economic policy advisor Art Laffer to break it all down. Okay, wage growth, 2.9%, Art, highest in 9 years. Is this, I mean, people are saying that higher wages could be the inflation upon us. That's why the stock market is ricocheting around. What do you say?
I don't think that'd be showing up in wages right away. I mean, I would expect to see it in all sorts of other indicators. The one thing I am worried about, Elizabeth, is that I am worried about the weak dollar. I think the weak dollar is the one pillar of economic prosperity that is missing. We've got great fiscal policy. We've got good spending policy. We have terrific regulatory policy. The tax cuts are spectacular. The only thing I'm really worried about is the dollar and the foreign exchanges. But other than that, I don't really see anything that would warrant a big decline in the U.S. economy. I just don't see it.
Yeah, that's the issue, right, Art? And here's the other thing that's going on. Here's what freaked out the markets. And I say that because it's a direct quote from a Wall Street source, that when the market started swooning, that 10-year yield still went up. You would think that it would go down because people are rushing into it as a safe haven. Are you concerned about this sort of soapbox derby crack up in the government bond markets around the world because of that 21 trillion or so in money printing that went on, that, you know, government bond yields are going to have to start competing with each other to get investors to come into their bonds with higher yields, and that means inflation?
Yeah, well, you know, Jerome Powell, the new head of the Fed, whom I'm really very, very happy he's the new chairman. I'm glad Trump switched, because now we can get someone who can really control the monetary base and make sure we don't get that type of inflation. And if he does his job correctly, I'm not really worried about that long term. I think we need to have the TIPS yield rise dramatically, Liz, but frankly, I don't want to see that expected inflation rate rising, and that will continue to rise as long as the dollar's weak in the foreign exchanges.
You're talking about the Treasury inflation-protected securities.
Excuse me. Yes, yeah. I'm sorry.
But,
I'm sorry.
You know, Art, I want to get your reaction to this. There's a lot of noise from the left. They're eager to associate President Trump with anything negative. They're basically saying, you know what? You know, he has to own the market when it goes up. If he's going to do that, he doesn't have to, but he's owning it on the way up. He's got to own it on the way down. I mean, are they grinding an ideological axe to beat up a president they can't stand? We get it. It's politically dangerous for the president to take basically ownership of the market going up and brag about it. Obama did it, too. Go ahead.
Yeah, well, I think Trump deserves credit for the market going up, and I think he really does deserve it in this last downturn. He probably deserves credit for that, too. But the net effect is it's been a very, very strong market since he became president. And I think that's because of his policies. I think they'll stay high. And if you were asking me a year from now, would the market be up or down, I think it'd be up a lot. So
you are not worried about a further stock market correction? Some people say bear market territory. We're going into a bear market. What do you say?
Don't ever say I'm not worried about it. Of course I am worried. I don't expect that to happen.
Okay.
I mean, obviously it can happen, and things, I mean, they move around all over the place. But I think the policies are in place for rapid economic growth. I would be very surprised if we don't see economic growth in the first quarter of 3+%, maybe even 4 or 5%. I think it was dropped in the fourth quarter because people were deferring income. But I think we could get growth rates well above 4% over the next 2 years. And that would be extraordinarily good for the country, for the budget, for the everything we can think of. State and local governments, everything.
And final point, inflation comes upon us because of monetary, basically, issues, and also because of demand. That's what causes prices to go up, not because of wage gains. And by the way, Art, is it Ronald Reagan's birthday today?
It is, isn't it? What is it, February 11th? Is that today?
Oh, no, then we're wrong. We're getting too excited for Reagan's birthday. Sorry. We're a little early.
Okay.
We're celebrating already.
But let me just tell you, the weak dollar always is followed by inflation. And that is something we need to watch. Under Reagan, from 78 until 85, the dollar was 67% up. Gold prices fell sharply during that period, and inflation came under control. Under Kennedy, you had a strong currency. He reaffirmed the dollar's convertibility into gold, and that led to the go-go 60s. The one thing we really need to do is make very, very sure we don't have a collapsing weak currency, because that will lead to inflation, and it'll lead to stock market cracks and breaks. And you don't want that to happen. It's just not good for the country. King dollar is the way, as Larry Kudlow always says, it's king dollar. And a strong country always has a strong currency.
Good information. Art Laffer, great to see you. Love having you on.
My pleasure. Thank you.